Hello friends, as an Indian investor, one may often hear about emerging markets, but what exactly does this term mean? Simply put, emerging markets refer to economies that are in the process of becoming advanced economies. These countries are often considered to be high-growth and high-reward investment opportunities, but they also come with higher risk due to their volatility and uncertainties. India, along with several other Asian countries, is considered to be one of the most prominent emerging markets in the world. In this video, we will explore what emerging markets are, what makes them attractive to investors, and what the future prospects look like for these markets. What are emerging markets? Emerging markets are countries with economies that are in the process of transitioning from developing to developed. This means that they are in the early stages of industrialization, urbanization, and globalization. They have a high potential for economic growth and are characterized by rising incomes, expanding middle classes, and growing consumer markets. The term, emerging markets, was first coined in the 1980s by the International Finance Corporation (IFC), to describe countries that were not quite developed, but not quite developing either. Since then, the term has come to refer to countries with lower income levels, higher growth rates, and a greater degree of political and economic volatility than developed economies. Some of the key characteristics of emerging markets include high growth potential. Emerging markets tend to have higher growth rates than developed markets due to their young and growing populations, expanding consumer markets, and increasing investments in infrastructure and technology. Volatility. Emerging markets can be subject to significant fluctuations in economic growth, currency valuations, and stock market performance due to factors such as political instability, social unrest, and changing global economic conditions. Risks. Emerging markets carry higher risks for investors due to the potential for economic and political instability, limited transparency and governance, and regulatory uncertainty. Examples of emerging markets. Some of the most prominent emerging markets in the world are located in Asia, including China, India, Indonesia, Malaysia, Thailand, and Vietnam. These countries are home to more than half of the world's population and have experienced significant economic growth in recent years. India, in particular, has emerged as one of the most attractive destinations for foreign investment in the world. With a population of over 1.3 billion people, India is the world's second most populous country and has a rapidly growing middle class. Now, let us understand why these emerging markets are so attractive to investors. Emerging markets can be attractive to investors for several reasons. Reason number one is high growth potential. Emerging markets offer the potential for high returns on investment due to their rapidly growing economies and expanding middle classes. Second reason is diversification. Investing in emerging markets can help to diversify an investor's portfolio, reducing risk and increasing potential returns. Third reason is access to new markets. Investing in emerging markets can provide access to new and growing consumer markets, which can be important for companies looking to expand their reach. Fourth reason is lower valuations. Emerging market stocks are often undervalued compared to developed market stocks, providing an opportunity for investors to purchase quality assets at a discount. Fifth reason is higher interest rates. Emerging markets often have higher interest rates than developed markets, which can provide attractive returns on fixed income investments. Let us understand the future prospects for Asian emerging markets. Asia is home to some of the world's most promising emerging markets. As economies in the region continue to grow and mature, they are expected to become increasingly important players in the global economy. As an Indian investor, it's essential to understand the opportunities and challenges in emerging markets. While India is one of the fastest growing emerging markets globally, it's not the only country that offers significant potential for investors. In recent years, Asia has emerged as a dominant player in the global economy. According to a report by the International Monetary Fund, Asia accounted for nearly two-thirds of global growth in 2019, with India and China leading the pack. One of the main reasons for the growth of Asian economies is their young and educated population. With a median age of around 30 years, Asia has a significant advantage over the aging populations of Europe and the United States. This demographic dividend, combined with rapid urbanization and the rise of the middle class, has created a massive market for consumer goods and services. However, investing in emerging markets like Asia comes with its set of challenges. These markets are often volatile and can be affected by political instability, economic downturns, and currency fluctuations. Investors must have a long-term perspective and be willing to ride out short-term market fluctuations. One way to invest in emerging markets is through exchange-traded funds. They offer a convenient and low-cost way to gain exposure to a diverse range of stocks in emerging markets. Investors can choose from various ETFs that track specific countries or regions in Asia, such as the iShares MSCI India ETF or the iShares Asia 50 ETF. Another option for investors is to invest in companies that have a significant presence in emerging markets. Indian companies belonging to Tata Group, HDFC Bank, Reliance Industries, Infosys, Airtel, Asian Paints, Bajaj Auto, Nestlé India, Sun Pharmaceutical, Wipro, Larsen & Toubro are a few examples of companies that have a substantial presence in Asia and offer investors exposure to the region's growth potential. In conclusion, emerging markets like Asia offer significant opportunities for Indian investors looking to diversify their portfolios and tap into the region's growth potential. While these markets come with their set of challenges, a long-term perspective, and a willingness to ride out short-term market fluctuations can help investors reap the rewards of investing in these markets. Thank you so much for taking the time to watch this video. We hope you found it informative and enjoyable. If you're feeling generous and want to give us some love, please smash that like button and leave a comment below. And if you're feeling extra generous, share it with your friends and family so they can learn too. We're always cooking up some awesome content, so hit that subscribe button and help us build this cool community. Take care, keep learning, and keep growing until we meet again. Cheers.